Hello, Tiernauts, and welcome to this daily market commentary for Wednesday, the 3rd of July, 2019. Got to the middle of the week ahead of a US holiday tomorrow, so some early closes here, and personally looking forward to a day away from things tomorrow. So, without further ado, what happened? Well, Wednesday certainly had that sort of pre-holiday feel about it, which is hardly shocking because obviously in the US that's exactly what it is. Early closes for both the stock and bond markets in the US, and a slow wind down in FX. Obviously, the whole world likes to make a holiday out of it, even if it may not necessarily be a holiday where you live. Crypto, of course, is one exception. Doesn't recognize any holidays, and it's a perpetual pursuit of seamless trading. Bitcoin, which I say had a raw battle with the 10,000 level, has continued to bounce off the aforementioned level, trading as high as 11,570 at one point during the day on Wednesday. A brief dip sub 11,000 was quickly repelled and would end the day off its best levels, but around about the 11,200 level. ETH would ping around between 290 and 300, and would end the day around about 293. Not much in the way of news for the market to work off, but the price action at least is constructive. And certainly where Bitcoin's concerned, you really do have to admire its resilience, because there was a lot of negative talk of what would happen on a break of 10,000. For other asset markets, well, it was back to looking at lower interest rates, higher equities, and the daily tweet from President Trump, which today had the dollar scurrying briefly. First up, though, was the ADP US non-farm employment data, which is always acts as a bit of a precursor to the government data, which will come out this Friday. This came in a little bit weaker than expected, although there was a small upper revision to last month's number. Didn't have a huge effect on the market. If anything, equity futures in the US rallied a little bit, kind of that softer number, whilst there's still growth, but you've got the Fed potentially looking to cut rates maybe at the end of the month. So kind of a Cinderella number, but it's all about what happens on Friday, really, to be honest. Shortly after the data came out, we got the Mr. Trump's tweet about how the US should join China and Europe in manipulating their own currency. I think that was a rather tongue-in-cheek comment from the president, potentially about weakening the US dollar to make US goods more competitive with Europe and China. I don't think he would have any real say in being able to do such a thing, but it did have the markets moving for a little bit. The risk-on currencies, as I like to call them, benefited the most. We had Aussie rally up to a high of 0.7039. We had Kiwi up to 0.6720. And we had dollar CAD moving lower down to a low of 130.62, which just above the level I highlighted in yesterday's technical analysis, around the 130.56 level. Euro dollar also bounced with the dollar weakening, got up as high as 113.10, but faded later in the day to sit near 112.80 by the New York close. Gold, with yesterday's followed on yesterday's move higher, hitting a high of 1437.50 before settling back closer to 1420. Quite a volatile 24 hours on the yellow metal. A little bit, going to take a look at that in our technical analysis with our chart right up here. Bond markets will continue to rally, sending yields lower. The 10-year US yield down to 1.95%, and further expectation of a Fed rate cut later in the month. And finally, equity markets had a good day to remember. European shares and US shares up across the board, with both the Dow Jones and NASDAQ closing at all-time highs. Remember, tomorrow, Thursday, July 4th, is a US holiday, and equity and bond markets in the US will be closed. FX and crypto markets obviously will be open, but muted compared to normal days. And then when we come back on Friday, you've got the non-farm payroll data to look forward to at 8:30 Eastern Standard Time, which should be the market moving event for the week. So I just want to look at gold just quickly, really, before sign off for the day and essentially for the week. Towards the end of June, I don't know if you remember, I highlighted a monthly breakout to new highs not seen since 2016 for gold. And I think to do that, I think we just had to close above the 1375 level, which we did. And in so doing, we've actually seen quite a volatile reaction over the past week, with 2 or 3 attempts of breaking back down below this 1382 level. We've had a couple of attempts back up towards, just shy of 1440. Whenever you get this sort of volatility, it's important you don't get chopped up by the volatility. So keep an eye on these levels as the ones to respect, and depending on your trading style, either trade between them, buying close to here and staying close up there, or look for a potential break lower or break higher from either of them. What you don't want to do is get chopped up too much in the middle here. So just keep an eye on that, and keep in mind also with the non-farm payroll data on Friday, that could very easily act as a catalyst for a break one way or the other. And with that, I wish everybody the very best of luck, and I look forward to speaking to you probably early next week, as I should be taking a very brief hiatus with the holiday in the US. So look forward to speaking to you then, and wish you the best of luck. Cheers.